Welcome back to the Real Estate Girls podcast, where Heather and Casey, your go-to duo for real, unfiltered conversation about the highs, lows, and laugh out loud moments of the real estate world.
We got a jam-packed episode for you today. I'm very excited about. First, we're going to give you a market recap of what's going on in the real estate world. Next, we have a special guest on today. He's an insurance expert. He's going to break down everything you need to know about homeowners insurance. After that, we'll answer a question that isn't commonly known. And we're going to answer that question. We're going to ask it, we're going to answer it, and then we're going to close things off with a motivational quote to get you through the week. So let's get this party started. What's going on in the market today, Heather?
All right, the typical U.S. homeowner's monthly housing payment is $2,793 a month, just a few dollars shy of an all-time high, according to Redfin's weekly market report. NAR reported that total inventory for the nation at the end of February was 1.24 million units, up 17% from a year ago.
So up 17%, that's inventory. A lot of people mention the Federal Reserve and their influence on interest rates. Now, the Federal Reserve is the central bank in the United States, and they influence interest rates by setting a range for the federal funds rate. Now, what is the federal funds rate? That is the rate at which banks lend each other these short-term loans overnight. I call them short-term loans because they are short, to meet those reserve requirements. That range is between 4.25 and 4.5%. I think right now we're at 4.33%, holding steady at that number. Now, if that range goes up, interest rates tend to go up. And why might they go up? They're going up because the Fed's trying to combat inflation, maybe an overheating of the economy. If that range goes down, you will see interest rates follow suit. They will go down. And that might be to combat a recession or cooling off of the spending in the economy. And so 8 times a year, the Fed meets. They meet and they discuss what they're going to do with these rates. The next meeting is May 7th. And so we will be, on pins and needles to see what's going to happen. I know they're predicting 2 rate cuts this year in 2025. So we're all hoping May 7th we have great news and there is a cut.
Right now, Realtor.com's annual best time to sell analysis identifies the weeks of April 13th through the 19th as the ideal window based on seasonal trends seen over the past 7 years to sell your home. I think that that's important for homeowners right now to know because there's a lot of inventory on the market, like we just said, up 17% from last year. Housing affordability, $2,793 on average monthly. That seems like a lot to me. But again, that's average. And I think with inventory elevated, prices are coming down and hopefully affordability will be there. The homeowners and buyers will be able to afford homes. And that average monthly mortgage will go down.
The 30-year fixed rate mortgage averaged 6.67% this week, according to the Freddie Mac survey, which is lower than a year ago. And hopefully they go down from there. I just feel like if we can get down to 6 or even under 6 this year, everyone's going to be happy. Buyers are going to be happy. Sellers are going to be happy. Realtors are going to be happy.
Things will be more affordable.
Absolutely. So we'll keep you up to date to see what happens on that meeting on May 7th. Now, a lot of today's podcast is about insurance. What affects insurance premiums? When I'm just thinking about this, we've had some natural disasters that recently happened. As recent as January this year, we had 14 California wildfires that took out over 18,000 homes and structures. And we had Hurricane Helene that actually hit here in September of 2024. I say here in Florida, it hit southwest of Perry, Florida, which is in Taylor County. And estimated $78 billion worth of damage there. You had the landslides from the 30 inches of rainfall. You had the images of people on their roofs, which was quite hard to watch, to be honest. But going back to California, you had insurance companies leading up to those wildfires, such as State Farm, Allstate, scaling back and pulling out of that state. And why is that? So part of that is the wildfire risk. Part of that is reinsurance premiums are going high, so the cost of business there is high. And part of that is just the rising cost of construction and building in California. And so I mention these disasters because the question that we will ask, and we have a special guest with us today, is are these disasters affecting homeowners in Florida, their insurance premiums, and is it affecting people outside of Florida?
Yeah, absolutely. We're thrilled to have a very special guest with us, Vince Flavia,
No
an
pressure.
owner of WeInsure, an independent insurance agency. Vince brings over 31 years of experience to the table, with 29 of those years spent working in Panama City, Florida property and casualty market. Beyond his impressive career, Vince is also an Army veteran who has lived in Germany and several U.S. states. He spent his childhood in the Fort Walton Beach area, and today he continues to serve the community with dedication. We're excited to dive into today's conversation and hear Vince's insights on the world of insurance.
Well, thank you for having me.
Thank you
Thank
for
you for
being
being
here.
here.
Yeah, we really appreciate you taking the time to speak with us. Also, thank you for your service to this country, Army
Yes.
vet. That's pretty cool.
Yeah, my pleasure, or whatever the proper response is.
I'm curious as what inspired you to get into the insurance industry.
Try to condense this. I studied economics in school, so engineering, economics was my degree. So when I decided to leave military service, went into manufacturing, supervisory roles. Basically, the plant shut down at one point, and I'm like, okay, time to put that economics degree to work in a clean environment without a bunch of noise and something to do with numbers. And so when I was looking for my next career, the financial industry opened up, insurance, financial services, and that was 31, 32 years ago.
And now
So-
you're the owner of WeInsure.
Yeah, Chuck Bond and I own the agency. We're a franchise. WeInsure actually is mainly in Florida, but we have franchises in several U.S. states.
So a hot topic right now is some of these natural disasters that we've been seeing. Obviously, Florida, we have to deal with hurricanes.
Right.
California, in January, saw 14 wildfires, and you saw a lot of major insurance companies such as State Farm, Allstate kind of pull back in the years leading up to those wildfires. Are any major insurance companies pulling out of Florida like they did in California?
No big news of any companies leaving. I'm aware of one that would like to. Not going to mention names right now because they haven't actually submitted it and had it approved, by the Office of Insurance Regulation. But there's one company, they stopped writing in Florida a little while ago, and they would like to leave. They don't have a lot of business here, so it's not going to be a major impact. It's not like after Hurricane Michael. I'll probably refer to that a lot. It was kind of a everything in our area is before and after Michael, After Hurricane Michael, we lost several companies through financial insolvency. They left altogether, or someone else bought them out and took over the business, which was a good thing. But nothing major going on for Florida right now. Actually, more companies are getting into Florida.
Oh, well, that's surprising. Yeah, because I know when Hurricane Michael hit, and that's a Category 5 hurricane that hit here, 160-mile-per-hour winds. It was a direct hit, Panama City, Mexico Beach. And personally living here and working in real estate, I think we have seen an increase of premiums, insurance premiums, since Michael. And maybe that's because a lot of companies moved out or, went bankrupt or reinsurance issues.
There was like I say, the financial issues. Obviously, if the companies are going insolvent, there's not enough money coming into the system. So then it becomes a look at, is it, the premiums are insufficient for the risk. We'll talk about reinsurance, I think, some more. Insurance companies have to buy insurance for these catastrophes. They don't have billions of dollars just sitting in the bank. So they buy insurance also, and we can talk about that a little more if you like. Kind of forgot my whole train of thought a little bit there, but
I think you answered the question. So
okay,
that's awesome.
very good.
Yeah.
There's more to the whole thing. A lot of it, insurance companies were talking a lot about legal reform having to do with the way lawsuits were handled and paid in the state. Florida legislature about a year or two ago made some revisions to the laws, which helped a lot, we're told, with that. So the number of lawsuits have been resolved. There's less coming in. So the insurance companies are starting to stabilize.
Oh, that's good to hear.
Mm-hmm.
And so you're saying insurance kind of stabilize a little bit in the area.
Yeah, we're seeing on the renewals that are coming up now, very little increase, like 1 or 2% premium changes. The rare one, sometimes we'll see a decrease in your home insurance rate. Not too often, that's always nice. But the increases going forward seem to be a lot less now.
Yeah, I think in the fourth quarter, 2024, there was like a 0.7 decrease, which is promising moving forward over state of Florida. And
Yeah, you have to look at,
insurance
because they always tell you the state, overall the state,
Right.
and then, each area has a little bit different. So
depending on where you're living.
you have to drill down.
Right.
The panhandle of Florida is still considered very risky for a lot of companies.
Gotcha.
That makes sense. How do solar panels affect insurance rates?
Solar panels. This got real popular a couple years ago,
Yes.
and kind of like took the insurance industry by surprise. So it takes a while to adapt to things. But for the individual, solar panels, what you usually see are people that will buy them and install them on their roof. Once you do that, it becomes your property. Anything attached to your house is part of your house. So now you have to add the value of those solar panels to what you're insuring your house for. So obviously that goes up, your premium goes up. There's also liability issues depending on the solar panel company and what level of, I'm not an expert in solar panel voltages and technologies, but at some point, they require that you have $1 million worth of liability insurance, for example. So now you've got to buy more liability insurance also. So there's some personal decisions when it comes to that, because you may be saving money on your electricity, but you're probably going to end up paying more on your house insurance.
Right.
More of the companies have started, I said it was a surprise at first, but more of the companies now have made provisions in their policies, either including it in the house coverage, or some, which I kind of like better, will have it as a separate coverage, a separate endorsement that you can add to your policy.
Okay.
So you don't have to lump it all together. There's a special rate for that.
Yeah.
I think, go ahead, Heather.
Well, that's something that I wouldn't have thought about, is the liability factor of it, because that wind gets under the solar panels, lifts them off, and they can land in whoever, especially Hurricane Michael. We saw all kinds of property in other people's yards.
I wouldn't necessarily consider that a liability issue. It's more about, well, what if your power surge does something to the
I see.
to the grid or whatever.
I mean,
Another
and
point.
but so let me walk through this in my mind. So
Do you have solar panels?
I do not have solar
Okay.
panels. We do not.
I don't either.
I'm not an advocate for
I
solar
don't want
panels.
them.
I am
Yeah.
not either.
Because I've had a lot of transactions where we're like scrambling to get insurance for these things. And my question, I was thinking about actually today, is say a storm comes through. It doesn't have to be a Hurricane Michael. God willing, it's not. But say we have a hailstorm or some sort of significant storm where that roof gets damaged and those solar panels have to come off. Are you guys, as an insurance, are insurance companies paying to have those solar panels removed to repair the roof and then putting them back on?
That's all part of it, yes.
Wow.
That's part of the revisions that had to be made in those policies. And which is why the premiums are higher.
Right.
So,
And I mean, are you really saving money on solar panels? I think that,
Yeah,
this is a hot
everybody has
topic.
to do the math on
If you
that.
do, it's simple math. I mean, you almost have to be living in that house for 30 or 40 years if you really break down the numbers.
Well, there's, like I say, everybody's situation's different. From what I understand, I mean, the average, most people are paying $30, $40, $50,000 for these solar panels. They're taking out a loan to do that.
Mhm.
So you got to offset the loan with the savings from your electric bill. I have a smaller house. It's a little more energy efficient after the hurricane. My electric bill, I tell them, they come to the door and I tell them what my bill is and they go, never mind, we can't help you,
yeah.
And
So,
I think,
but other people are suffering $400 or $500 electric bills. So
Does permitting matter on solar panels if it's permitted? Or I would assume, I would hope everyone who is using a professional who pulls a permit and closes it out. But does that matter as far as insurance?
I've never run into issues with that because I'm pretty sure you're going to have to pull permits because you've got to get the electric company involved.
Gotcha.
Yeah.
and even if you pay more because your insurance premium is higher because of these solar panels being on there, an appraiser's not necessarily going to give you a $50,000-$60,000 adjustment.
Right.
And
yeah.
so that's
We don't see
why, I
that.
mean, I'm speaking for myself. I don't know how you feel on it, but
From your
from
your
my
real estate
right, I think
perspective.
the biggest thing that irks me is when you have someone that purchases a home and they're like, oh, we're going to be here for 3 years, and they purchase $50,000 worth of solar panels.
I've seen
And
that.
so then most buyers, especially in this buyer's market, they want those solar panels paid off at closing by the seller.
I've heard that. Yeah.
So now you have a $50,000 swing, and how do you make that up? I mean, you're not going to make a profit on your house here.
You lose your equity.
Right.
A lot of it, if you had any.
So, how does the age of a home specifically affect insurance rates?
Specifically, I don't know. They keep their formulas, proprietary. They don't how they calculate the rates. A lot of it, I mean, it's in the manual. I don't get into it because everything's computerized now. You put in and it spits out a number. It has to do a lot, of course, with their loss experience and building codes at the time the house was built. Plus, the older a home gets, the more likely you are to start having problems. Now, I agree, my house has been here since the 40s and 50s. We went through this many hurricanes and we're still standing. Yeah, but you're going to start having plumbing issues. There's other things like that. I think in the 70s, we didn't have strong building codes. Used to be houses built in the 70s. I just went, ugh, because I knew it was going to be expensive. Actually starting to see 80s houses more expensive now than I would have thought. Northwest Florida, again, the Panhandle, we had some exceptions to the building codes from what I have read in the past. Oh, we got so many pine trees, it's going to break up the wind and we're not going to have as much damage
that.
and, things like that. Situations are changing. So yeah, the older the house, you can kind of assume that it's going to be pricier than a new house, obviously. The latest Florida building code is FBC 2001, went into effect in 2002, required a lot of wind mitigation features and things. So they're assumed, because they were required, anything built 2002 and newer, you automatically get some credits because it's less likely to have some wind damage. You can get these credits on older homes through a verification inspection. Bay County's pretty good. I do most of my work in Bay County. Most of our houses, if it's 80s or newer, has the hurricane clips to help hold the roof on the house, the rafters. So we can pretty much assume that, but it has to be verified. Every once in a while, I'm surprised you'll even find a house from the 60s or 70s that has them, and that really helps the rates.
Yeah.
It's all about keeping the roof on.
Yeah, absolutely. I know some homes that those are in the Cove, so near historic downtown. Anytime I've sold them, you either, if they have a newer roof, they've had the hurricane clips added. It's very rare that you'll even find homes from the 40s or 50s unless they have an older roof that doesn't have hurricane clips. So
You can retrofit. Sometimes it's tricky because a lot of the older houses don't have much of an attic sometimes. They're very low, and some people can't even get in the attic. But if the roof overhangs the walls, you can actually, and through the eaves, you can install them on the outer side of the wall also. So
Didn't know
I've
Because
seen that.
right, so like older homes, they use, and I just want to kind of put this in my head and kind of try to explain it. But when you are toenailing, right, you're
Hmm.
securing the trusses to the outer wall,
Yeah, that's
and
the
that's
point that we're talking about.
right. So essentially, that can come off pretty easily. But if you have a clip, it's more secure, and it's if wind comes in.
Right. It's a
So
bracket
right,
basically, and it's secured, I think, minimum 3, maybe 4 nails on each side of the bracket. And then you even have straps, you know, single strap, double strap. Um, and some people now they're building houses with rods, steel rods that run and are bolted. So,
During Hurricane Michael, we stayed in my husband's uncle's house, so technically my uncle-in-law, and he was a builder and he over-engineered his house, and he
mhm.
did that in his home. He had the steel rods. During the hurricane, you could see Hurricane Michael in 2018. You could see what was happening outside of the windows, but you could have sold tickets to be in that house because it was like a movie.
wow.
In the house, you could hear it a little bit, but the house did not move. It was incredible. So,
Yeah.
hey,
And they're
I'm all
coming
for
up with
that.
some, last few years, some pretty neat construction designs
Yeah.
that but they're kind of fascinating. If I could afford it, I'd like it.
Absolutely. Yeah. I mean, hurricane clips, I see a lot of people right now wanting to, hey, asking, hey, we have an older home. Can we get hurricane clips just so we can get the credit
Yeah, just have
to,
to talk to a building contractor, have them take a look, see if they can do it. They'll price it out for you.
and I think, while I'm thinking through this, that's why that you have a lot of D.R. Horton homes just flying off the market. I mean, they got great interest rates, of course, but when you have insurance that's under $1,000 versus
Yeah, new.
insurance $3,000 to $6,000 a year.
A lot of it's the
Um,
wind mitigation, and then of
mhm,
course the assumption is it's a new house. It's not going to have any problems for several years.
mhm.
You know,
So you're not
the
expecting
plumbing's not going to leak. The water
costly
heater's not going to
claims.
leak. You know,
Right.
water's a big issue when it comes to older homes that the insurance companies worry about. So they'll limit the amount of coverage that they provide for water damage on an older home. To,
All right. Do natural disasters like hurricanes, wildfires, floods, tornadoes affect insurance rates nationwide?
you would, there's some influence, I would think. Of course, earthquakes and stuff, that's not covered here in Florida, so earthquakes aren't an issue um, in our rating. Um, Insurance finances have become almost national and international. It's all tied together. So, yes, there's going to be some influence, I would think, mainly probably because of the reinsurance factor that we mentioned. Insurance companies get their reinsurance basically on a global market. I mean, insurance representatives from Florida fly to London and talk to the reinsurers. They go to Switzerland and talk to the reinsurers to negotiate their rates and what segments, they call them tranches, that they're going to buy. Okay, we'll cover up to this and you cover up to that, and we'll pay this much, and this company will cover up to this much. So there is this national, international play, in what insurance can cost. But I don't know that there's any direct. We're not, in my opinion, we're not going to see our rates go up because they're having fires in California.
Gotcha.
Going back to, and then to 2004, 2005 hurricane season, Florida got hit by like 5 or 6 hurricanes in 2 years. That's when everything changed for Florida. We got all these new things about hurricane deductibles and annual hurricane deductibles, and insurance companies, like the major ones, saying, we're not going to write any more new business in Florida. We'll keep what we got, most of it. Um, that's when you started seeing these companies in Florida that you don't hear about anywhere else. They've been here 20 years now, 25 years. because no one else was willing to do business. So they created, these new companies came in, were organized. But even the big name companies, basically rate for Florida. They separated Florida from the rest of their business. So it's kind of like we're on our own, so our problems are not going to drag down the national corporation. That's why they did it.
Yeah, Florida is unique in that sense. Is the Gulf of America, we definitely get more hurricanes than most
and
areas.
both sides.
Yeah.
We are a peninsula, so we stick out in the Gulf and the Atlantic.
Yeah.
And read your insurance policies, because I picked up on you saying these new hurricane, deductibles. You might say, oh, this is a great insurance premium, but then the deductible might be $7,000, $8,000. So
The standard pretty much for years now has been a 2% hurricane deductible.
okay, so 2% of the
Whatever
value
the
amount.
limit is on your house, coverage A, the dwelling's insured, for 250,000. You do the math times 2,000, and they do it for you on the declaration page, so you can see what the dollar amount is. But that would be your deductible during a period of a hurricane. And they define that, again, read your policy. It's from the time a watch or a warning is declared in the state of Florida. So Miami could have a hurricane and we're sitting here with cloudy skies. You still have a 2% deductible if something happens at your house during that period,
Wow, I didn't know that.
That happened to one of my customers. Yeah, we had a thunderstorm and he had
hurricane?
and I say that all the time. I'm like, because they'll stop you writing too during hurricanes and until, so many days passed. I'm like, it didn't rain here. Could we please start writing business? But they wait for all the claims to start coming in so they can see what's going on. But so you've got a pretty large deductible when it comes for hurricane. And one thing about it too is, I say it's an annual hurricane deductible. So that if we have, like happened in the past, more than one hurricane, you only have to meet that hurricane deductible one time during that year. So kind of like if you're familiar with how your health insurance deductible works. So if you meet your 2% deductible after storm one, and we have another hurricane that damages your house again, then your other deductible would apply.
Let's hope that doesn't happen.
Yes. I'd say it happened in 04 and 05 because
Right.
they crisscrossed right in the middle of the state. So, and that's after that, most of the companies were kind of waived it, and all that kind of stuff. But that's when that feature started getting written into the policies.
So let's switch gears. Let's talk about flood zones.
Okay.
What is the worst flood zone to be in, and how does an elevation certificate help with flood insurance?
I was going to start out by saying the VE flood zone, which is if you're right on the water, you'll see, VE, I think it stands for velocity or storm surge area. So that's going to be, as far as flood zone, that's going to be your highest risk. And then you move in a little bit inland and we have the AE zones, which aren't as bad, but still expensive and lenders require it. And then you get into the X or X500, which the lender's not going to require you to have flood insurance, but our little catchphrase is, we live in a county called Bay.
Yeah.
We're at sea level. Drainage isn't that great. You might want to consider it even if you don't have to. We do have some areas in our county, we say COBRA, but it's CBRA, Coastal Barrier Resources Act, went into effect 1982. So they've blocked off some areas.
The best flood zone to be in is an X.
X,
I think
yeah.
a lot of
They used to be called C around here, but it changed to X. They changed them to X.
Because I always get that question, Casey, or I'm sure you get it too. I don't want to be in the flood zone. I'm like, well, everything's technically a flood zone.
Thank you. I've drummed that into everybody. I'm like, well, realtors will tell you you're not in a flood zone sometimes, but we are all in a flood zone.
But you can purchase private insurance, like you said, and that's what you recommend, even if you are an X. It could be a couple $100 a year.
We quote both. we try the private market, and we do the National Flood Insurance Program to see how that all pans out. A lot of times, like I said, the limit's 250,000 with the National Flood Insurance Program, but a private company, you can insure the full value of your home.
That's what I love about working with you, Vince, is when I send a customer your way, you give them all the best options because you do quote all of the options there. And I think that that's important for
One of the
customers to
advantages
decide.
of being an independent agent is you have more resources, more companies that you can work with. So yeah, that's definitely a benefit to be able to check a few things. Now, let me know if I'm rambling, but our flood maps
Have
changed here.
I was going to mention that.
Yeah,
Yes.
it was October 24th, 2024. It's like,
Mhm.
boom, we
Oh, it
have
was
new
an
maps.
X. Oh, just kidding. You're an A now.
Now we changed your zone. The mortgage
Mhm.
companies were pretty quick to catch on to that. So
Yes.
we've had some customers, like you said, brand new houses. They were
Mhm.
sitting there. I don't want to be in a flood zone. They bought the house. It's in an X, and now they're getting a letter a year later that says you're in AE and you're required to have flood insurance.
Yeah, I've had those calls just recently.
And
And it's just like, here's the new flood maps that came out.
And we'll attach the link to the new flood maps. And if you're not in Bay County, if you're in Oklahoma and you're interested of knowing what flood zone you're in, we'll attach the FEMA maps for our customers as well.
I use it to double check because now some of the private insurers were a little slow at updating their websites with the new flood maps. So we're getting quotes for X, and I'm like, change that, and get the real rate back.
And what is reinsurance?
Yeah, you've used that term a couple times, kind of explain it a little bit. Like I said, an insurance company has to buy insurance for catastrophes. So they're spending millions of dollars on insurance also to cover these. Once the claims go over this amount, the reinsurer starts throwing the money in, to cover that.
So it's insurance for insurance.
That's exactly what it is.
And if that goes up, then insurance companies have to charge more to cover that.
Absolutely. And the charge and the willingness to accept a risk. Insurance is all about risk, transferring risk. You take the risk or you pay them to take the risk. And how much risk do you want to take? That's, you adjust your coverages, you adjust your deductibles. That's how you manage your risk. The insurance companies manage their risk by saying, yeah, we'll insure you, or no, we won't, for various reasons. And reinsurance cost is a big part of that now. When you put in the amount of insurance and the deductibles that you'd like to have, and you go, give me a rate, sometimes it goes, no. It doesn't meet the strategic risk modeling, meaning they're having to pay more to insure your house than the approved premium is. So you can play with it sometimes by adding coverage. And this is, what we do with quoting. Oh, buy more ordinance or law coverage, lower your deductible or raise your deductible. Then it might flip the equation to where, okay, we can insure you for that. Because they can't spend more on their insurance than you're paying in.
Exactly. Do you think I just remember after Hurricane Michael, you had a lot of people fighting with insurance companies, right? They were hiring private adjusters. And so they felt like they weren't getting enough out of their claims. Like that would constitute, rebuilding a house, for instance, that's completely needs to be gutted. And then you have the other end of the spectrum where you have fraudulent claims. So
That's a huge
Is that-
factor.
right.
And
how do you find the balance, I guess, is the
Yeah.
question.
Well, a lot of it, through my experience, and of course, I'm coming at it from two angles. As a homeowner who had damage from the hurricane, and as an insurance agent, representative of the companies who's been doing this so long, and I see the other side of it. Hopefully we won't get in trouble for anything I say.
You
But
can cut it
some of the people's frustration, there's several things. Well, one is you file a claim, and I had this same frustration, and you expect to hear from your insurance company right away, to have your claim adjusted right away, and to have some money right away. Well, the law in your policy contract says you have this much time to do your thing and they have this much time to do their thing. And meanwhile, you're sleeping in your camper or your car, or you're out of town waiting for the insurance company who has, 30 days to tell you what they're doing in 60 days to pay you. Now, some of this has changed for the recent reform laws that we talked about. There's more limitations on policyholders and lawyers and public adjusters, but they also cut back the times on the insurance company to get their stuff done. So that was a good thing. Public adjusters, lawyers, lawsuits. That was one of the big reasons for insurance companies having financial problems. The way the law, again, I don't delve into it too deeply, but I think they one-way attorney's fees. So if you filed a lawsuit and you won even $1 more than what the insurance company had offered you, then the insurance company had to pay you and your lawyer all their fees, and they could basically, here's my reasonable fee. Who determines what's reasonable? Oh, the lawyer does. And there was all kinds of issues about that. One of the things that I think in the revisions eliminated those one-way lawyer fees, and so that's a reason you have a lot less lawsuits and more insurance companies leveling out these days. Get all your stuff together and file supplements to your claim. It may be the depreciated amount, and once you show the insurance company that you actually fixed it, they'll pay you the rest of the money. A lot of people just didn't understand. We hadn't had a catastrophe like that before. So everybody learned something.
It was emotional. I think it was an emotional, obviously,
Very.
event.
I mean,
and so when you mix emotions with, okay, now I've lost my home, or
it's traumatic.
So
we have a thunderstorm
patience,
today, and I get nervous.
Right.
It's crazy.
Yeah, I mean, sometimes I have the patience of my 2-year-old, and so I can only imagine if you're living in a camper, you probably don't have that much patience. But I think there needs to be grace on both sides.
Absolutely.
And some understanding, and hopefully we don't have to go through that again.
Yeah.
One thing I
absolutely.
like that our CFO did, we had a few times they call Insurance Village right after the catastrophe, when all the companies show up with their campers and they sit in the Sam's Club parking lot or whatever, so you can go see them
I saw
because
that.
phones aren't working and things like that. And then down the road, the state basically says you all need to show up on this day at this time, and so you can meet with people who have problems. And they did that at Gulf Coast a couple times. I went myself. It helped probably. That it's like, okay, I'm the policyholder and I'm the agent, and here's the situation. But anybody could do that, and you walk away with a check. They were expediting things on the spot to help you out. So I thought that was really good.
That is good. That's good to know in case the next, devastation comes, to know
Yeah.
that that's there and available.
We try not to think about it, but we get nervous every hurricane season.
Yeah. Do permitting issues affect homeowners insurance?
Again, of course, with new construction, everything's permitted and everything. The only thing that has become an issue post-hurricane was roof permitting. I like to say we don't have any issue in the underwriting with old roofs around here because everybody's got a new one,
Right,
and they're
and
all
everybody has.
architectural shingles or metal, and so it's not a big issue. But what became an issue is the insurance companies were getting real picky about, well, was it permitted? Was it done to code? Permitting just means that the contractor is monitored and it is inspected to have met the Florida Building Code. And as you experience after a catastrophe, you may have a lot of out-of-town contractors. My roofer was from Jacksonville. I knew the deal. I'm like, okay, you're going to get the permit, and I'm going to see it. And you're going to call the county when it's done to come do the final inspection, and I'm going to see that, that it's done.
But a lot of people don't know that.
People don't
They
know
just
that.
think,
They need a
oh,
roof over
right,
their head, and
exactly.
there ain't, and the contractor says, I'll do it, and he's running around doing a lot of things, so sometimes the paperwork doesn't get done. We've even had local contractors that pulled the contract or whatever and forgot to. You have to go back the second time and say, hey, we're done, we need the final inspection.
And that's just so you can get a building inspector out, inspect the roof, make sure it's up to code. So
It's
you
all
can
about
close
the-
out that permit.
You close out,
And
it's called
it's actually
finalizing the permit.
It protects the homeowner.
It
because
protects them, and
you
if it's
don't
not
wanna-
done right, some of the, like I say, inspectors are good, they'll like, and they'll make the contractor come back and fix it. Some of them had to go 2 or 3 times, but it makes sure your roof is done right, and that's what the insurance company is looking for. They're not looking, unfortunately, I had customers that, they're pretty handy. They know where to buy the shingles at Lowe's, and 2 or 3 of their 4 of their neighbors from church, whatever, they got up there and nailed them down. Well, okay, it looks good. Your roof may not leak, but as far as the insurance company's concerned, your roof is not a new roof.
So essentially, you cannot get new homeowners insurance if the roof is not permitted. It needs to be permitted, correct?
Yeah, they're
Closed
not
out.
going to accept it
Okay.
as a replaced roof if you don't have the permitting done properly.
Thing is I see this a lot, and I'm sure you see this a lot, Heather. We can't find our roofer. How are we going to get this permit, closed out? And what you can do, Bay County, I'm not saying this is for every house, but you can file a missed inspection. You write an email, explain what happened. It's like $150.
Okay,
The
I didn't know
homeowner
that.
can do that.
I did
The
not know
homeowner
that.
can do that. And because the roofer is maybe from Jacksonville.
Yeah, they're gone.
And maybe they're out of business now.
I think mine
or-
passed away.
Yeah, maybe they're in Fiji. Who knows? They changed their numbers. You can't get a hold of them. So you can file and pay that missed inspection fee. It's about $150. You get the inspector to come out. Hopefully the roof is good. They
Okay.
close out the permit, and now you have a permitted roof.
I'll have to look into
So,
that
yeah.
because I know
Easy fix.
experience I've had too is the contractor's gone, but hey, I know this guy, he's a roofing contractor, but they won't
Well, they don't
want to
they-
put their name on it because
Right.
if something's wrong, then
They
they
don't
have
want
to
the
fix
liability.
it.
They
They
take
have
that
to fix
liability.
it.
Whoever closes out that permit, or say it's not even a permit was never even pulled. If they pull a permit, they're responsible for that roof.
That's
Then
right.
anything's
So
wrong.
that's
yeah.
why, you have local roofers that don't want to do this because that's not a roof that they know anything about.
Exactly.
And yes, do they want, to help the homeowner, but that's a lot of liability on the roofer.
Yeah. They cost more than they used to.
What is a wind mitigation and 4-point inspection, and how do they affect insurance premiums?
The 4-point inspection is basically to qualify. Okay. Insurance companies require them at certain ages of homes. Some companies require them at 30 years, others at 40, others at 50. There's like 1 or 2 companies that will do their own inspection, so you don't have to pay for it. But we've been burned a few times, so most of us will say, just get it, because you're going to get the wind mitigation at the same time. We talked about wind mitigation credits, so you need that verification form. It's the wind mitigation verification inspection form, I think is the full name. And that's the one that looks at, do you have hurricane clips? Was your roof permitted? How is it nailed down? How long are the nails? How close are the nails together? Do you have a secondary water resistance barrier under those shingles? Do you have hurricane approved windows, shutters, and doors? See, all of these are different credits that will lower the cost of your insurance. Whereas the 4-point inspection is more of they want to know, when was the roof up? It's a age and condition of your roof, your plumbing, your heating system, and your electrical system. So they want to know, how old are these things, and are they in good condition? If it's on your policy, you don't have to go redo it. Now, if you get a new roof, I would recommend you redo it. But you'll maintain the credits. They're not going to go away after 5 years if you're still with the same insurance company. But if you apply to a new insurance company and the last inspection, wind mitigation verification you had was 6, 7 years ago, you've got to redo it for that new application.
Have you guys run into issues with the Challenger electrical panels?
Again, yeah, we were talking about the condition and age of the electrical system. And so that's one thing they're looking at is there's certain electrical panels, circuit breaker boxes, that they have determined through experience are not as safe as they should be. Challenger is one of those brands. FPE, Florida, I forget what it stands for, but FPE is another one. My house was built in the late 90s and it had a Challenger. They're pretty common. They're new, they install them. You don't know it's a problem till a few houses have problems and there's claims and stuff. So then the insurance companies experience this through their claims and they say, okay, we don't want these anymore. So yeah, you've got to swap them out. Of course, actual fuse boxes are no longer accepted. The old screw-in fuses, you can't insure a house with those. There's certain types of wiring, cloth-coated wiring in really old houses, fire hazard. Aluminum wiring running through the house, that's not good. If you have to get your house replumbed, you have a really old house, if it's over 50 years, sometimes you get insurance. With some companies, they're like, you got to redo your whole plumbing. They use PEX plumbing these days. Usually it's, blue for cold and red for hot. That's, there's PEX. Older PEX plumbing and older, I think, forget, 2010 maybe? If it's after 2010 or newer, it's fine. If it's before that, they don't want it because the first version of it started leaking, So there's that too. And I think I'm right on the year, but I have to double check that.
What type of insurance coverage is needed for a home and how does it differ from a mobile home, especially when financing is involved?
So they're basically homeowners policies. So you have the same parts, same risks. It's just one's designed for a site-built house and one's designed for a manufactured or mobile home. You always have to do replacement cost estimators. Every insurance company, when you do a house now, requires you insure it to 100% of the calculated replacement cost. There's some leeway to go over that, but you ain't going below it, not for new business.
Does that go up every year to account for appreciation? Because you see a lot of homes I hate
They used to not.
Okay.
Some of them in the past did not, but the insurance companies realized, hey, they're falling behind fast.
Right.
So they are either doing a set percentage increase every year, which may or may not be accurate. So you look at it and you question it. Get with your agent. They can do a recalculation.
I think that's really smart because a lot of people, they might have a $400,000 house or $500,000 house, but it's only insured for $300,000 or $400,000.
Construction costs have increased a lot. And I suspect, depending on the tariff situation, we're going to see additional increases. A lot of lumber comes from Canada. There's a shortage of skilled workers in the construction industry, and like I say, construction costs continue to rise. So it's not a bad idea to review your replacement costs. I see it all the time. Of course, a lot of people are coming in at renewal to see, hey, my insurance premium went up. Can you make it cheaper? Well, we can look at that, but we also need to look at your replacement costs. You're insured for $220,000 now, but I always tell the customers too, there's not that much difference. Sometimes when we do the replacement costs and the loan value, they allow us to do 10, 25%, wiggle room above. We'll find a happy medium to make everybody happy, as he who has the money makes the rules, is what I like to say. So we try to
I like it.
We try to walk the line and satisfy everyone, because you want your new house, right?
How do insurance carriers handle coverage for older systems such as a 25-year-old water heater or any older systems? Are there specific carriers or policy types that allow for this, and what factors impact eligibility or rights?
Yeah. The main system, I know that's probably sparked this conversation, is water heaters.
Yes, I just had this
Yeah,
one.
you asked me that one. Um, because, like I say, water is a covered peril, covered cause of loss, and it is a major cause of claims for insurance companies. So they're really looking at plumbing issues and water heater because that's where a lot of our water leaks come from, appliances and the water heater. And the water heater, of course, can be avoided if you just have one that's not going to leak, a newer water heater. So most insurance companies now have put like a 12-year to 15-year age limit on water heaters, especially if it's in the house. They may give you some wiggle room if it's sitting outside in your garage, because if it starts flowing water, it runs out in the road. But if it's in the house, we're talking thousands of dollars. Everybody's got
Right.
fancy wood flooring and it swells and you got to rip it all up. So I'd say in older homes, like we mentioned earlier, they're limiting the amount they're going to pay for water claims, typically to $10,000 because of this. And insurance companies are looking at the age of water heaters, and they don't, I mean,
It's all about
Home Depot
risk.
will tell you, hey, or any plumber, the average water heater in the U.S. now lasts 9 to 12 years, and you've got a problem after that.
That's
So
not really that long. I
it's
was
not
thinking it was
that.
going to be like
It's-
15.
It's,
Yeah.
yeah, I say one company will let you do 15, but most of them have settled on 12. And then we've got one or two liberal carriers. Hey, as long as it's in good condition, and when we look at it and it doesn't look bad, we'll take it. One or two.
I think the takeaway is if you are really looking for home affordability, go with a newer construction home. Or if you're just in love with the Cove or St. Andrews,
Make
just
sure
make sure
everything-
everything is up
Make
to
sure you
date.
have all
Yes.
your updates.
And if
yes.
not,
Get your inspections ahead of
If
time.
you, if you want to come out of pocket, more for insurance, then, that's your choice.
But
these are the
I've had
recommendations
people
we have
say,
for us.
what's the cheapest, the lowest insurance? What's the best house to buy? I'm like, new, brick, hip roof.
New brick hip roof.
Hip
We'll
roof
leave it
is-
at
I love
that.
it.
Hip roof is better wind resistant than a gable roof.
Okay.
Yeah, I bought my house in the late 90s, and this is before hip roofs were a thing, before it affected rates. I'm like, oh, I look, all right. And mine was the first house built on the street, and I think my next door neighbor was the second. We have gable roofs. Everybody else in the street has a hip roof. And I'm like, wish I'd known that because I could have bought that one over there.
Can you just real quickly explain the difference between a hip roof and a gable roof for people that don't
It's
know?
kind of visual. Gable, I always tell, it's like, it forms that triangle on the side of your house. You know how you used to draw a house with your finger painting, like, you take.
Right.
And then there's wall that forms a triangle. That's a gable. A hip roof has roof slope on every side of the dwelling. So it's like your house is wearing a hat. You walk around your house and you see shingles all the way around.
Okay.
That's a hip roof.
So new brick hip.
That'll be your
New brick
cheapest.
hip.
That'll be your cheapest insurance. Yeah.
Well, we really appreciate you. Thank you for coming on, Vince. That was a wealth of knowledge.
It truly
I
was.
appreciate the
I
opportunity.
hope you can come back.
I'd be happy to. I love talking, and I've been doing this so long. I don't mind talking about insurance.
Thank you, Vince.
Thank
we
you.
appreciate
All
you.
right, my pleasure. Thank you.
In every episode, we love tackling a real estate question that isn't commonly known. Today, we are diving into the world of mobile and manufactured homes. In today's market here in Panama City, we're seeing a surge in mobile and manufactured home sales. Largely, these homes tend to fall under the $250 price point, making them more affordable for many residents. So, Casey, what is the difference between a manufactured home and a mobile home?
So I did not know the answer to this question before I got into real estate. What is the difference between a mobile home and a manufactured home? The key lies in how it was constructed and the date of construction and the standards. So if a mobile home is considered a mobile home, if it was constructed prior to June 15th, 1976, and there's not that many regulations on them. After that date, after June 15th, 1976, um, you will be considered to be in a manufactured home, not a mobile home. And HUD, the Housing and Urban Development, required new standards for these type of homes. They're just built better. And so that's the primary difference between a mobile home and a manufactured home. Now, both require to be titled. And I think a lot of people don't know this. I certainly didn't when I first got into real estate. But when you think mobile, you think, okay, you can buy that piece of property and then transport it on wheels. And so when you purchase a manufactured or mobile home, it's just like similar to purchasing a car. You
Yep.
have to go down to the DMV. You have to get a title, which is proof of ownership, showing that you own that mobile home. And then you drive it to a piece of property, hopefully you own, or maybe it's an aunt or uncle's property, um, but it has to be titled. Now, you hear the term retirement of
Yes.
titles a lot. And this is when you affix the mobile home or manufactured home to the land. So it's one and the same. You see this a lot at real estate closings because lenders require this. Once it's retired, you throw that title out, it's canceled, and it's affixed to the land and it cannot be moved.
It's essentially real estate, the
Real
whole
property.
package. Yeah, real
Absolutely.
property.
Is considered real property.
Yeah.
And so that's an interesting, a lot of people don't understand that process, but you definitely need a title or a retirement.
How does a modular home different from a mobile or manufactured home?
So you have mobile home, you have manufactured home, and now you have a modular
Modular.
home. So a modular home, you have to look at the standards and how it was built. These are a lot of site-built homes. They're considered similar to site-built homes, and they have different requirements for the standards. A modular home, typically you see on a mobile home, you see like a chassis where you can move. These will not be moved, and it doesn't necessarily need a title. You don't need a title for these. So a personal experience I had with this recently is I listed a property. It looked like a mobile home. It looked like it was actually a manufactured home because it was built after June 15th, 1976. But when you look at it, you say that is a manufactured home, right? So the problem that we ran into is that we could not find the title and we could not find proof that it was retired. And so between me and the title agent that I use, our heads were just spinning as to, okay, did this person never get this manufactured home titled? Come to find out, it was a modular home that does not require a title.
Oh, wow.
And so that is the reason why there wasn't a title that existed or retirement. And so those are the three key differences.
So a modular home, because to me, a modular home is a home where parts of it were put together somewhere and then they move it by flatbed to the site that it's going to be essentially attached to with some sort of foundation attachment. So tie downs or whatever it may be.
Exactly.
So whenever you have a modular home, it's really like having a site built home.
Absolutely.
Okay, so you don't have to look for a retired title whenever
No.
you have a modular home.
And your home's going to appreciate more with a modular home. If you are in a mobile home currently or a manufactured home, just make sure that title is retired because you will see your home appreciate instead of depreciate. If you just have a title, it's really just saying you own that mobile home or manufactured home. You don't necessarily own the land. So make sure you get those titles retired so your home has the ability to appreciate like a modular home.
And you now have, what did you call it? Real property, real
Real
estate.
property.
Yeah.
Yeah.
Yeah. Okay. Good deal.
We always like to end our episode with a little motivation to get you through the week. Right now, Heather and I are reading The Gap and the Gain by Dan Sullivan and Dr. Benjamin Hardy. And this quote from Steve Jobs really stood out to us. You can't connect the dots looking forward, but you can connect them looking backwards.
This is so true in real estate, home ownership, and especially when it comes to homeowners insurance. You never really know how important the right coverage is until you need it. It's only in hindsight that you see how the choices you made, whether it's picking the right policy, working with a trusted insurance agent, or being proactive about protecting your home, set you up for success.
So while we can't predict every twist and turn, we can make informed decisions today that will make sense when we look back. Stay prepared, stay proactive, and trust that the right choices now will pay off in the future.
Tune in next time on the Real Estate Girls podcast for a mix of education, entertainment, and expert advice, all delivered with a dose of Southern charm and honesty.
If you enjoyed this episode, be sure to like, comment, and subscribe to our podcast. What real estate questions would you like us to cover in future episodes? Your feedback really helps us shape our show. Drop a comment and we'll talk to you soon.
Thank you.
Thanks.